Good afternoon and welcome to NYFP. In midday trade on this Thursday, the major U.S. stock averages are eking out a modest gain. Joining me now is Sandra Navidi of BeyondGlobal. Sandra, good afternoon and thanks for joining me.
Thank you, Remy.
Well, we had a lot on the fundamental front today. We had central bank rate decisions out from across the Atlantic as well as some jobs figures. But given that the ECB left rates unchanged as widely expected and also issued their growth and inflation forecasts, what do you make of the latest developments?
Well, as you said, they were to be expected because the economic growth forecast is very weak, and that is consensus view. And in line of that, they left the interest rate unchanged because also if they'd lowered it, I don't think it would have been much more effective because what banks are saying is, behind the scenes is that they're really not going to lend out much more money, so it wouldn't really cause more credit growth because the banks are doing really bad. They will have to do more write-offs. They will have to change their business models because in tune with a bad economy, they will make less profit. So in case of doubt, they will probably hurt the liquidity.
And Sandra, the ECB did leave the door open for possible monetary policy changes going forward. But earlier this week, we did have other developments, including the PMI composite figures, which does remain below the 50 level. We also had a slightly disappointing bond auction out from Spain, but we also can't keep our eyes off of Greece. So what is your near-term outlook?
Well, I think to get back to your first question is the ECB has done a lot, and it's now putting pressure on politicians to come up with credible, timely policy measures because the ECB can build a bridge, but it cannot build the destination. So it's going to be there and render life support, for instance, for Spain, which the market sentiment has eased a bit with regard to Spain, but that's not because of Spain's strong fundamentals. The banking system is still under a lot of pressure. More losses to be, big losses to be expected in the banking sector there. And so I think that eventually Spain will have to ask for a rescue package, or they would have to leave the currency union.
And Sandra will continue to monitor any developments that do come out from Spain, if any, heading into the end of the year. But I do want to shift our focus on over to Japan. Now, as we head into year-end, we will be getting a couple developments out from that country. We do have the election coming up, as well as the final third quarter GDP reading. And also, last but not least, so we have the BOJ rate decision on December 19th. But what is your outlook for the nation?
It's in a very difficult situation. The deflationary pressures are very strong. It's one of the biggest export nations, and it's seeing a decrease, 6.5% year-over-year decrease in exports, 20% decrease with regard to Europe alone. So you can really see how how the crisis is going global and the implications that the European crisis has on other countries. Japan is one of the biggest economies in the world, so it's really fundamental what's going to happen there. And most likely we will see aggressive policy measures from the Bank of Japan.
Okay, Sandra, well, thank you so much for joining me on this Thursday, and thanks for your take on the central banks today.
You're welcome. My pleasure.